Hi. If you are one of the 30 crore Indians who hold an LIC policy, this video is for you. What does LIC's decision to get listed in the stock market mean for policyholders? This video is vital given the sheer number of Indians impacted by it. My name is Pallavi Prasad, and a reminder to like this video, to subscribe to us, and to share this video with your friends and family. Let's begin. The government, which has owned 100% equity in India's insurance behemoth, Life Insurance Corporation, since its inception in 1956, is selling off 5% of their stake, or 316 million LIC shares. LIC's initial public offering, where the public will have a chance to buy into these shares, will take place in March. Policyholders will get a discount during the IPO, and up to 10% of the shares for sale will be reserved for them. Up to 5% will be reserved for LIC employees. Once the IPO ends, the shares sold will be available for trading in the stock market. Now, there are pros and cons to this, and our focus is policyholders. Pro: LIC will come under the direct watch of SEBI and will have to comply with the requirements meant for other listed firms. This will likely lead to higher transparency, better governance, more disclosures, and over time, this will increase its efficiency. So it may deliver higher returns to policyholders in the long run. Con: the biggest selling point of LIC is that the government guarantees each policyholder the sum assured by their policy plus bonuses no matter what. It's written into law, the LIC Act. But it's a question on many people's minds. Could this guarantee go away now that the other shareholders are in the mix? The centre has stressed repeatedly that this will not change the sovereign guarantee, it will continue. This is a fact. LIC will still be a government owned company. But here's some food for thought. Rules for an IPO and listing say a dilution of at least 5% is required. This will be scaled up in 2 years to 10% and then to 25% in the next 5 years. As LIC privatizes, for how much longer will it make sense for the government to provide sovereign guarantees to all policyholders? Pro: LIC will become more competitive, and with it, the entire industry. Thus, the consumer benefits with better pricing, product features, and services. Con: this move could dent the public perception of safety that LIC has for a lot of Indians. Competition with private insurance companies also means that it will have to target big policies that bring greater profits. Smaller policies that the poor and lower middle classes purchase could become less attractive. Pro: successive governments have used LIC's coffers to bail out struggling PSUs like ONGC, Food Corporation of India, Coal India Limited, even private banks like IDBI. After the IPO, pressures from investors could force LIC to make decisions more independent of the government, investing policyholders' money more profitably. Con: which is a double-edged sword, because it also means that investors could influence LIC to make decisions independent or even despite the interests of its policyholders as well. Goals like expanding insurance coverage in unprofitable rural areas could suffer a setback. Another instance of how policyholders will be at risk as investor influence increases over LIC. At present, LIC first pays 5% of its annual surplus to the shareholder, which is the government, and the remaining 95% goes as bonuses to the policyholders. In the coming years, as more LIC shares go up for sale, these investors will have the opportunity to elect one board member if they have up to 10% of shares and two if they have more than 10. These board members could demand that LIC trim its bonuses to policyholders and retain a bigger pound of flesh for them, or increase LIC's cash flow. The latter is already happening in some ways. Big investors have made their apprehensions known to the government about LIC's low solvency ratio, that is, how much cash flow it has at any point to cover its long term debts. For the last 2 years, to increase how much cash it's sitting on, LIC has not been giving any surplus to the government, only to policyholders. So think of it this way: the LIC IPO benefits policyholders more indirectly and slowly, with promises of better corporate governance, more transparency, and healthy competition. Finally, the big picture. Disinvesting in LIC is strategic at a time when India's fiscal deficit isn't looking too good. Just the IPO next month can fetch the government anywhere between rupees 60,000 crore and rupees 75,000 crore. And think about it, in a country where only around 2% of the population accesses the stock market, publicly listing LIC's mammoth assets for a small elite group to buy could be looked at as undermining the interests of the crores of small policyholders who faithfully hold on to their LIC policies for a rainy day. I'll stop here for today. If this video helped you understand this story, which is almost always told with so much financial jargon, please like and share it widely with your friends on your social media groups and with your family on WhatsApp. If you'd like us to do another video on how policyholders can buy shares when the IPO goes live, what all you need to do before that, tell us in the comments. We read all of them. Don't forget to subscribe to us on YouTube and follow us on Instagram. And last but not the least, do make a monetary contribution towards Newsworthy. You can simply scan this QR code on your screens right now, matter of fact. You can also contribute via ScrollStack, the link to which will be in the YouTube video description and our Instagram bio. Your support allows us to keep doing the good journalism that you deserve. If you've been listening, thank you so much for your time.